What is going on, guys? Welcome back to Intelligent Money Investing. My name is Chase, and today we're going to be talking about two more monthly dividend ETFs that you guys can buy and start getting those monthly payouts each and every month in your portfolio. So I made a video like this probably about a week back, maybe a week and a half back, about my top three monthly dividend ETF. So definitely check that out after this video if you haven't already. But we're going to add in two more here. One that I just added a position in, and one very high dividend yielder that I've had a position in for a while. Before we get into that, I want to give a quick shout out to the Discord chat that has been going for the Intelligent Money Investing community. There's about 30 people in here so far. It's pretty active. A lot of other like-minded investors kind of talking. So I'd love to see if you guys join in there and join the Discord community. It'd be great to see you guys in there, and it's totally free. Just so you guys know, it's not something I'm trying to make money on. I just want to kind of be able to connect to more of you guys at a easier messaging way and allow you guys to connect to each other, just because the YouTube comments doesn't do quite as well of a job as Discord does. Now let's get into this video. So the first one is going to be one of the ETFs that I bought recently and that I talked about in ETFs I'm buying for May 2018, and that's going to be DGRW. And now one of the things I want to caution you guys on for both of these ETFs before we get into the video is that when you're dealing with monthly dividend ETFs, you do deal with a higher expense ratio. So like with this one, the expense ratio is the money that gets taken out as a servicing fee from the entire fund by the company that services the ETF. So with a 0.28% expense ratio, for every $100 that you have in the ETF, they're going to take 28 cents per year in order to service that fund. And that's definitely going to cut into your profits over the long run. So typically you want to look for these lower expense ratios, but with monthly dividend ETFs, it is going to naturally be higher because they do have to service the dividend 12 times per year rather than the typical 4 from a normal ETF. So you basically have to weigh if that monthly dividend is worth it for you compared to a normal quarterly dividend. I like to have some monthly dividends in my portfolio just because that kind of helps me stay motivated and see that monthly payout, and that way you don't have to wait 3 months between dividend payouts. So in my opinion, I like to do that for a small part of my portfolio, and you guys can make that decision on your own. Now let's get back into DGRW. So DGRW, essentially, we're going to look at the fund summary here. It's weighted and it consists of dividend-paying U.S. common stocks with growth characteristics. So with DGRW, we're basically looking at dividend growth stocks, which is going to be great because like a video I made a while ago talking about your current dividend yield doesn't matter, but when you're thinking about the payouts you're getting today, that doesn't matter as long as if those dividends don't increase. I'd rather get a $1 dividend today that I know is going to be a $10 dividend in 10 years than a $2 dividend today that's still going to be $2 in 10 years. If you guys know what I mean, like that increasing is really what you need, and allows that compound growth to kind of happen and allows you to get more return down the line because you do have these heavy growth stocks rather than the companies that are kind of capped out on the revenue that they can perform and they just kind of kick back that same dividend year after year. So the top holdings of DGRW are ExxonMobil, Johnson & Johnson, Microsoft, Apple, Wells Fargo, AbbVie, Altria Group, Intel Corp, PepsiCo, and the Home Depot. So these are very safe growth stocks. A little bit of growth and a lot of dividend. These are companies that make a ton of money and will continue to make a ton of money into the future. Very big names as well, and that's going to be a little bit different than what we're going to see in SDIV in just a second. But real quick, the yield on this is 1.87%, so that is pretty low. That's about the same as the S&P 500, very similar to that. But as we said before, we aren't worried about that current dividend yield. We're worried about what that yield will hopefully do in the future as these companies grow, make more profits, and are able to reward their shareholders for being with them. So the expense ratio on this one is 0.28%. And that is fairly high when you compare it to a lot of the quarterly dividend companies. Like VOO is 0.04%, SPY, which is one of the biggest ETFs out there, is 0.07%, I believe. And so this is a little bit higher, but it's one of the lower ones when it comes to a monthly dividend ETF. So the next one we're going to talk about is SDIV. Now this is a Global X Super Dividend ETF, and if we look at the fund summary down here, essentially what this ETF is trying to do is take the 100 top dividend yielding securities in the world, including emerging market countries, and making an index of that, and it pays out a very hefty dividend because of that. So this one's definitely going to be a little more risky. You're not going to want to have this as a main position in your portfolio because, as you guys know, when the higher the yield you have, the yield may be too high based on a payout ratio of many of these companies. So when you're looking at that dividend yield, if you're getting paid out like 10% from a company, that may mean that this company is doing so well that they're able to kick back so much money to their shareholders, but they also may be struggling to grow and keep capital because they're paying out so much and trying to sustain that dividend, that they're putting themselves in a bad financial position, and that company is eventually going to go out of business or have to cut that dividend, and that dividend is going to go away for you. So, and this one does have a 7.05% yield, which is extremely high, and it also has a high expense ratio at 0.58%. This is one I have a small position because I do like seeing that high dividend yield, but as I said before, you definitely don't want to have this as a top position in your portfolio. I more have this as kind of a fun way to be diversified a little bit globally because pretty much everything that I own is centered around the US market, and also to get a high dividend yield for a larger portion of companies that I do not see typically in my portfolio. So, top holdings right here. I'm not going to read through these, but you can see there's a good amount of real estate, and there's also, if you look through these, it's really not very many companies that you're likely familiar with. But also we can see something like this, like Air New Zealand Limited. Like obviously that's not something you're going to see on the U.S. markets, and probably a company you haven't heard of. And it's being a New Zealand company, it's obviously not an American stock. So this does, one of the advantages of this is that it does give you that global diversification. So these are just two ETFs to think about going forward. Definitely think about that expense ratio and weigh that against your main goals of the portfolio. I'm always going to be a strong proponent of having a very safe S&P 500 ETF as the core position of your portfolio. For me, that's VOO with its 0.04% expense ratio. You can't really get much better than that. But if you are looking for a little bit of a side position in a monthly dividend ETF, then these are two more ones that you could go with. And make sure to check out that other video if you haven't already. Now, if you like this video, hit that like button, subscribe if you haven't already, and I will see you guys in the next one. Thanks for watching.